This conference will now be recorded.
Okay, let me see if I can share my screen. And what you see is the CP worksheet that you're going to need for the project. When I reviewed the submissions, I found some problems that were going to cause you problems down the road. And so I'm asking you to resubmit. And as you work through, you got to list each of your raw materials. If the cost of that raw material is less than $1, then it's going to go down here to manufacturing overhead as a supply. So only raw materials that are more than $1. So keep that in mind. And you're going to get the product variable cost and your selling price multiple. You'll choose that and you will apply it to the product variable cost. Some people didn't have any, some people had the manufacturing overhead, but in the new way that we do our financial statement for planning, uh, the manufacturing overhead is not a part of that cost. So I think you all to redo it in this format. The top of this format, of course, is similar to the quiz in terms of the unit cost for all your raw materials and your labor, product variable cost. For bad debts, uh, we'll probably just use 10%. So you can use 10% of the selling price for that. And then for selling expenses, we'll use 20%. So I want this on Wednesday so I can review it before class on and on Thursday so I can go over any issues I see. You're only going to the contribution margin. So all you got to do is to go from selling price, multiple selling price to the contribution margin. Your bad debt is going to be 10% and your selling expenses 20%. Then I will work with you on Thursday on how to get the fixed cost in. But right now, I saw, seemed like I saw problems on all of them just in this area. Any questions on what I'm asking or what I'm saying?
This is for the project one, like the resubmission, correct?
Correct. The project one submission it's
Okay.
got to be. I asked you all for this format, but I hadn't introduced this form when you all did it. And so I saw some issues. And so it's got to be in this format with, the unit cost of one raw material, you know, for
Okay.
one product, what the unit cost is.
Got you.
Are we
And so
breaking
with
out
this,
to our groups to complete this, Mr. Boyd?
No. So that's going to be breaking out time after class. Because you're right,
and
because some people didn't have any costs in here.
we only need to submit this, not redo the PowerPoint, correct?
Correct. I just need this.
Okay.
And you'll begin to see today why that's necessary in terms of you're going to have to be able to do some tie-ins. You're going to, on Thursday, we'll get this completed and then you'll go through and do your provability to your net incomes that are there. And then we're going to be making journal entries and the details of what you do are going to have to produce those same lose 100,000, break even, make a million, make 2 million. Now, when I grade this year, the team leader is doing the first year, unless the team leader designates somebody. That's the lost $100,000 year. The team leader grade will be based on that for the whole project. Project being made that first year. And whether the team leader exempts the final or not will be dependent on the first year being done correct. Okay. After that, the team leader assigns the break-even year, million, 2 million, 3 million to other people. They've got to complete that, and I'll base their grades on what they do in their year when it's submitted. So the team leader is only doing the first year. Everybody else is doing a year. Was that clear?
Wait, Mr. Boyd, what'd you say?
The team leader will be doing the first year. Then the team leader will be assigning these other years to other people. Team leader grade is based on the first year, and everybody's grade is going to be assigned based on what they do on their year. So let's begin to look at what each year has to look like, whether it's a loss of 100,000, a break even, a profit of 1 million, 2 million, 3 million. Everybody has a year. Now, if you just got 3 people, then you're just doing 3 years. If you got 4 people, 4 years, 5 people, 5 years. Okay?
Dr. Boyd, can we do this on the paper that we printed out? Because you asked us to have printouts. Can we start our assignment on that paper? And like, how do we?
No, you're doing something else on that paper. We're gonna be to that in a few minutes. But right now, I'm talking about for the project. You know that what I asked you to print out is an example of what you got to do on the project. So we'll be doing this week, trying to finish up this week, the example of everything you got to do on the project. Then next week, we're working on the project. So you'll have plenty of time to work on the project. But this week, and maybe through early, first day of next week, we'll be working on that example, depending on how far we get. But starting next Thursday through the end of the course, you're working on the project only. Now, there'll be various assignments out of that project that you turn in piecemeal, but you're working on the project. Got it?
Yeah.
Got it.
So there'll be no excuses why you couldn't get this project done and get your year done, because you're going to have about 3 class periods where you simply work on that till the first
Hey,
year is
Professor
done.
Boyd, I wasn't here earlier on doing the explanation of the project. So, are you going to assign us, like assign a groups? Is it going to be in the Excel sheet on Blackboard?
Each team submitted a project, and at this point, uh, I'll get you to work with Mike to be on a team, unless, let's see, I think I had you on team 1 the other day, and it depends on how many people on that team. And whether, but you kind of got to, at this point, get into a team. Got it?
Last person I remember working with was Ashley.
Which Ashley.
Me from Team 1.
All right, so you, you go on with team 1, because I guess there are only 4 people, so that's fine. You work with them. So actually, that's 5 years, but actually, you're only responsible for the first year. They got to do their own work
Okay.
for their credit. It's a 100-point project. So the team leader, once they finish that first year, they'll be up to their 100 points. They got to have my project made, of course, and first year got to be correct. Typically, I meet with the team after I get that first year, each team separately, to go over it, make sure there are no issues or problems. Now, for some of you who got these big things you making, uh, unless you're going to rent a facility to make these sneakers and things like that, because you got to have a project. You are going to have an option. I think that's team one and what team six maybe. These all these big things they making. So unless you're gonna make that physically, you're gonna have to come to campus and you're gonna have to make an image of that. You'll make that image with a 3D printer that's on upstairs on the third floor. So a lot of production now is with 3D printers. And so you'll be making an image of what you're making with the 3D printer. So that's going to be part of what you're going to be doing. And so for team one and team six, y'all, unless you all are going to be renting the equipment and a facility to physically make those shoes, then you all need to do the research on what a 3D printer is. We'll have to probably meet separately with you all on that. And then you all are going to have to come to campus. Some persons on your team who, the management people who making this, and they're going to have to utilize the 3D printer to make an image of that item. But you got to have a physical item that you made. It can't be something you bought. Got it?
Got it. So you're telling us like making shoes might not be feasible, basically.
Well, how do you make a shoe?
I don't know. We'll find out.
Well, I told y'all to pick something simple.
Okay.
Remember I told you all that? So,
Yeah.
to make a shoe, you got to buy the material. So, a lot of things. Now, you can get that done, that's fine. But you'll find the instruction on the project say if you don't have a project, then you don't pass the project. Okay, you don't pass on the project. So you got to have a project. But actually, this is right down your line. 3D printer, give you a major,
If we
right?
make it, are we good?
Say that again.
I said, if we make our product, are we good?
You're good if you can make it.
All right, bet. I got you.
Okay, if you can make it. Okay, so I need this filled out, and maybe you put a comment if maybe add a cost in here on this raw material. Add a column in here. Let's see, insert column. Put it where I wanted it.
So right now, Mr. Boyd, what you asking us for? I'm just trying to get just a better understanding. What you asking us for Thursday's assignment that we need to have turned in is a cost volume profit of our project.
No, you just got to go to contribution margin. We hadn't done the fixed cost yet. But if you don't have the
Okay.
contribution margin correct, then, and I'm concentrating on that. I don't want to go any further. Uh, Getting the fixed cost done is relatively easy. But what I've got to be able to see, and what you got to have is, when we making the book, I think in the example I gave you, for the raw material, for that first raw material, which is ink, how many ink cartridges is it? How many ink cartridges? Somebody got ink there or signed it. How many ink cartridges is it?
2.
It's two? I need to see that. And then what's the unit cost of the ink?
$20 or
Mike, where
$10
you getting
dollars
it?
a piece.
Mike, where you getting the info from?
I'm making that up. These are off the problems. Come on, right?
No,
10.
no, I'm saying on the problem that I told you all to make a copy of.
And
Oh, sorry about that.
is that the master budget in class problem one, Mr. Boyd?
Correct.
All right.
So what
So
does it say? What does it say for the ink?
the ink for my team, I'm team three. I'm guessing. Oh, it says quarter one. I'm sorry. 5 ink cartridges per book.
So
Raw material
it's
ink. Yeah,
five ink
5 ink.
cartridges. What's the unit cost for the ink?
$10 per unit.
Okay. Then that's gonna come in here at 50. Okay. That's what I got to see. And that's what you're going to have to come out with the right numbers. You got to have the quantity and the unit price and a dollar amount here for each raw material. Okay.
All right.
So you put this column in here, you know, so we
So for example, I would have our raw materials that we have on our assignment on the class problem one. We have ink, we have paper, and rings of paper. Is that the
yeah,
same?
yep.
Okay.
So and we'll get back to that. But how many reams of paper is required?
7 rings per book, and they
Okay.
cost $7 per unit.
So you see how we can go right in here. We know the quantity and we know the unit cost. Okay.
Okay. Okay.
That's how your project got to look. So for every raw material, you got to do this. But I'm telling you, if the raw material is less than one, just move it down here to supplies. Secondly, we're estimating, so work with round numbers as much as you can. If it's $4.95, just make it $5 or whatever. So it doesn't have to be exact, and it's better to have round numbers. Okay.
Mm-hmm. Hmm.
So you'll have this plus your labor. That's your product variable cost. You have a multiple, and the selling price will be based on that this product variable cost. Then you calculate the bad debt as a percentage of the selling price just determined, and the selling expense to come up with the total variable cost. Okay. So I just want every team to get that to me by the end of the day tomorrow, so I can look at it. Uh, so as we're going through, we don't have a lot of going back and forth. Okay. So let's kind of see if we can see where we are. See, we're still working with the same thing. You're supposed to memorize these 3 formulas so you can just knock this out quickly. Now, in the master budget process, if we uh, are working to make something, a lot of time our sales are skewed to the end of the year on most products in the U.S. But you got to stay in business while things are weak, while you don't have a lot of activity. That is, stores in the mall, they don't do a lot of selling in the second and third quarter, but in that fourth quarter, they do a lot of sales, and they make their money based on the sales in the fourth quarter. But what has to happen is that they got to have enough money to stay in business, and that's true of you also. So let's assume that our business sells 20,000 units in the first quarter, 10 in the second, 10 in the third, and 160,000 in the fourth. Well, we're gonna make a lot of money, but if we're not paying our rent and everything in the first quarter, second and third quarter, we won't get to sell 160,000 and make the money we want. So look at this example, and you would do it monthly, but we're showing it quarterly, and on the project it's quarterly. Let's assume that the selling price is 50, all sales in cash. Our beginning cash balance is 100,000. The books cost $20 each. That's the variable cost. All our purchases are paid in cash, and the rent paid in cash is $1,000,000. So we pay that every quarter. And if the beginning inventory is 100 and the desired ending inventory is 100, that is when you're running a business, you got to have your bank account at a certain level. So let's see if we can see what happens in this example in the first quarter. So in the first quarter, We're selling 20,000 units. Selling price is $50 a unit. So 20,000 times 50 is how much in sales? Is that $1 million?
$1 million.
And our beginning cash balance was 100,000. Our cash available is 1,100,000. Now, if we sell 20,000 books, we got to buy 20,000 books. The books are costing what?
$50 a book.
Nah,
$20.
$20 per book. $20 per book. It's the cost per unit.
So the
Okay.
books are going to be what? 400,000. And we got to pay this fixed cost for the rent, $1 million.
Hold on, Dr. Boy. Where y'all get that $20 per? Oh, I see. Okay, cost of book number 5.
Yeah,
Cost of
right
book
there
6.
on number 5.
I see.
So
Times
how much?
$20.
So how much we got? How much our total disbursements are? 1,400,000. How much money we got? We're short what?
$300,000.
300,000. If you go to the banker prior to the start of the year, if you go to that banker prior to the start of the year, you could show him what everything is going to look like, and then he will give you a line of credit to stay in business. But you cannot do that after the year starts, and you're in trouble. They can't
You
make
got
money
you
based
guys
on.
got the
So you got to prepare this cash budget for the banker and show him what you need. So how much we got to borrow? We know that you
300.
got to have 100,000 down here. How much we
So we
got to
need to
borrow?
borrow 400,000.
Borrow 400,000. Let's go to the second year where we only sold what? 10,000 units. So we only sold 10,000 second, 10,000 third, and 160,000 on the fourth. So if we sold 10,000 at 50 each, what our sales are going to be? 500,000.
Mm-hmm.
Got that 100,000. We still got it. So we're
So
600,000. Our expenses, let's see, 10,000 books at 30, at what, 20 each, that's going to be what?
200,000.
200,000. You still got to pay the rent of $1 million. And so we're at 1,200,000. So now we're short what?
200,000.
More than that. You only got 600,000 available.
Don't we
So,
subtract them?
so how much you short? You got to pay $1.2 million, and you only got 600,000. How much
Oh, we
short are you?
600. We 600,000 short.
600,000.
Yeah, 600,000 short.
You put the 9 in there, Professor Boyd. 0 to 9.
So we subtract cash available from total disbursements. And that'll give us 600,000.
So now we got to borrow how much?
$700,000 because we gotta have 100,000 extra in ending cash.
I need to be on this line 400, 000, and now we need 700.
So we borrow $100,000 more because we need an ending cash balance of 100,000, right?
I have
Right.
100 in the bank all the time.
Okay.
Then the same thing's gonna happen again, right?
So, Mr.
500,000.
Boyd, Mr. Boyd, could that ending cash number be? I mean, I know we using 100,000 as an example. Would it be a different number in any of the problems, or will it always be
Always,
100,000
it's
ending cash?
always gonna be 100,000.
Okay.
So we did the same thing, 600,000. Now the cost of the books is gonna be 200,000 again. Rent's $1 million. Gotta pay that. So this is 1,200,000 again. So we short
That's
600,000 again. And this is actually, what's happening at a lot of companies. That's why you got these big bank buildings to borrow because they charge interest on this money. Now I'm gonna let y'all do fourth quarter and tell me what happened.
Yeah, you got 50 right there for your selling price,
shit.
and then you gonna put 8 million. Am I right? 8 million. Yeah, 8 million
Mm-hmm.
for the fourth one for
You said
total sales.
Total sales, yeah.
Total
Eight
sales 8
million.
million. Yeah, cause you did 160,000 times 50.
Mm-hmm.
ending cash is still 100,000, right?
Yes, sir.
So cash available is what?
8.1.
Right.
Selling 160,000 books. So how much is that gonna be?
160 times 20. You have 3.2? Yeah, 3.2 million.
1,200,000. We gotta pay our rent of $1 million.
So you have 4.2 million.
I don't know what's on today.
How do we stand now? Instead of short, we have what? How much money we got?
Eight. We subtracting 4.2 from 8.1.
Right. 3,900,000
Like three
maybe.
nine, 3.9. Yep, 3.9.
We're gonna pay back these loans. That's what, 1,800,000.
A million. So in the
Yeah, it's a
fourth
million
quarter,
eight.
How much money you got?
2.1 million.
Okay.
Oh, where
But
you get the
if you
million eight from? Did we add up all the short term loans
Yeah,
no,
we had the short-term loans
from the
no, you
previous
got
quarters?
first.
All right.
So this is what happens with most businesses. So that's why the holiday season, Good Friday on, why you have all that activity and everything is going on. Most businesses are operating like this. So what you got to know to do and be able to do with your business, you've got to go and uh, show this to the bank and say, if you do this, if we add up our total sales, the total sales are what? $10 million. See, this is how we're going to look at the end of the year. Our total sales are going to be 10 million. Our total costs are going to be what? We add up all of these numbers. The rent's 4 million.
That's 3.8. Wouldn't it be? No, no, no. Yeah, no, it would be. That would be 4 million.
That's 4. And the cost of the books.
It'd be 4 million. Cause that's 4. Yeah, it's 4 million. So yeah,
Now we're doing the income statement. And so our net income is going to be roughly what? $2 million. because we had 100,000 in the bank, uh, that's why the cash is 2,000,001, but we made 2 million. But you can't make this 2 million if you have not prepared this cash budget and this income statement and showed the bank how you're gonna make this. So when you're running a company, as we do the planning ahead of time, we prepare a cash budget like this and go to the bank and get our line of credit before the year starts. When businesses don't do this, then you see that newspaper up in the windows in the mall. Because they didn't have the sales, they couldn't wait.
Dr.
Any
Boyd,
questions? Yes,
I
sir.
do. I have a question.
Okay.
So, at the end when it says ending cash on our total, do we need to put the 2 million? Oh, it's already showing that. Do we need to have that 100,000 showing at the ending cash amount on our total also, or no?
Now it's 2,000,001. So the
Oh,
total is, and we add some things, but you only got 2,100,000 in cash.
okay.
What you got? So we aren't adding those across, and we're going up and down with that cash. It
Okay.
ends up 2,000,001. That's what you got.
All
You
right.
can't add the cash over.
So
Okay.
basically, quarters 1 through 3, we'll have to calculate those to get to 4, and then once we get to 4, our ending cash total will really remain the same as being the total, right? Because we already paid off our loans and we've already.
Right.
Okay, all right.
Pay off your loan. That's what the bank wants you to do. And then we go back to the next year and you do the same thing again. With 2,000,001, you may not have to borrow as much, because you got money now. But you would never have had this money if you had not laid out your your budgeting for your company and laid this out.
Dr. Boyd,
Dr. Boyd.
would we,
Do that again.
Dr. Boyd, if we went to the bank, could we go for, instead of doing it year over year, forecast for like 3 years? So you're not, because that first year you're probably not going to make a profit, right? And you don't want to go to the bank again, or how would you do that?
Actually, what happens is you go to the bank every year. The banking regulations are going to require you. They have to review the loan every year. So yeah, you
Mm,
would go every year. You might show them 3 years and show them how it's going and everything,
okay. Okay.
but they're going to go
Dr.
year by year.
For
Well, you would
our
show them
assignment,
3 years.
for,
You might show them 3 years to break even and everything. And what happened? He'd have you pay it all at the end of that first year. Then he'd loan it to you again. Okay.
Dr. Boyd, so say in our groups, our team leader is doing year one, and then he's assigning, or the person is signing out the next 2 or 3 years out for however many years. So say at the end of year one, as the example showing is showing 2.1 million, right? Would our beginning cash for year two for the next person be 2.1 million, and that's what they'll be
Two
working with?
point one. That, that's a good point. Whatever the cash ends up here in that fourth quarter is the beginning cash in year two.
Okay.
So
Excellent
every
point.
fiscal year, we'll have to keep going back to the bank, basically.
No, eventually you're gonna, when you're making $1 million, hopefully you'd have some money.
Yeah.
So the first year or two, things will be tight, but in y'all $1 million year and $2 million year, you should have paid back everything and have money left over. And something is wrong in your problem if that's not the case. If you
Yeah.
made $2 million, you should not be needing to borrow money. So something is wrong with your calculation. So that's why I tell you what I wanted you all to do. Because if you have a wrong assumption, if you calculate that quantity wrong, it's going to be a problem.
So
Okay.
if you're a banker, right, a loan officer, so you wouldn't really take account to them going negative all three quarters, and then relying heavily on the fourth quarter.
Happens all the time. That-
Jeez.
Don't you see the stores in the summer in the malls?
Yeah, when we used to go to the malls, yeah, I did.
But what happens once November gets here?
Marketing fiasco.
And
Yeah, they
bump
they
it up
put
on
everything
commission.
on they put everything on sale so they can try to make a return on all the profit that they lost in the summertime or maybe um, in their first quarter. Yeah, it's usually in the end of the or some stores that sell summer clothing they may make all their money in the middle of the year and then lose at the end of the year. So it kind of balance out.
Yeah,
Balances out. But even that, the styles are changing. So those summer clothes got to be sold by the end of the year so the new styles
Right.
can come out.
Most definitely.
Yeah. Okay, so you all are making something. Okay. So we got to do the same thing, except our process is a little different. We're going to do the same thing, but because we got all of these raw materials and labor and everything, we're going to have a schedule to calculate how much is being paid quarters. So this is just a very simple example. But this master budget process is what you're going to be going through each year. And you're going to need a sales budget and cash receipt, production, raw materials, a budget for each raw material, labor, overhead, selling, administrative, capital expenditure budget. You'll need all of these budgets. And then you got to prepare that cash budget that we saw before, an income statement and a balance sheet. So these have to be prepared each year. Now, on that simple one, we could have done that. We did the income statement and we could put that together easily. But as we work through our projects, we're going to go back to how we prepared income statements and balance sheets before. So how do we get an income statement and a balance sheet? How do we normally get an income statement and a balance sheet prepared? What occurs first? Forgotten about principle one. What's the first thing you did in principle one?
so you,
Journal entries.
You made some journal entries. You posted to the ledger. You got a trial and balance, and you did these statements. So we're going to be making journal entries, so we don't just throw some numbers in there to get the income statement and the balance sheet. And we're going to have a schedule. Each one of these schedules, and these schedules are going to give us journal entries so that we can do the financial statements, and then it's going to have a cash budget line to give us the amount of cash. So each team has one or two of these. The first one, the first thing we do is the sales and cash receipts budget. That's the first thing that we do, and we got to determine the sales and the quarterly collection. So everything's on a quarterly basis, and we're gonna realize that our starting point is that CVP formula and coming up with the quantity that we're gonna use. So the chart basically shows this, and I'm going to go through the first quarter, and you all do the second quarter, hopefully tonight, and then get the rest of it done by by Thursday. Now, so I've got here what journal entries you got to make: the initial investment, record the sales, bad debt, blah blah blah. Those journal entries, the accounts, you just got to get the amounts in here from the schedule. Production budget. In the production budget, we have to come up with how many are going to be produced each time. There are no journal entries for the production budget. But once we get the production budget done, here's raw materials. So the team assigned raw materials need to read this material, and these are the two journal entries you got to make. You make these journal entries when you total everything up. Here's direct labor, manufacturing overhead, selling expense, administrative expense, capital expenditure budget. And so as I'm doing here now, team can assign somebody to work on each one of these. So each team has something to work on now. And we have the cash budget where we borrow and pay back. Okay. And we get our financial statement. So let's see how this is going to work. And let's go to this problem. So in the master budget problem that we're working with, I made one slight change. I gave you the selling price. And I gave you a column called break even. So we're doing the break even year. And I just moved the numbers over here for you so you would have no trouble. One thing, we have to put everything in by quarter, whether the sales are by quarter, get our selling prices. And we're making all the sales credit sales. Then we got our collections. So you can sort of use this, but you got to have this developed also so you can work quarterly. Our desired ending inventory, 50%. The ink is 5 ink cartridges at 10. Paper, 7 reams at 7. This is how we pay for it. Direct labor, 20 books per hour, $20 an hour. Here's our overhead, and there's depreciation in it, which is not a cash outlay. I want to change the selling expense to 20%, so that'll be what we typically will be working with, and that'll just make this problem work a little bit easier. Administrative expense. Your initial balance is 200,000. So on the project, you're going to use 200,000 to start the business. You got to keep it at $1 million. You're buying equipment of $1 million, and here's your interest and principal. So the first thing you got to do, you got to take these assumptions. You got to go to this worksheet and fill it out and give me my quantities. I need my quantities. We're doing break even. But you can go ahead and calculate the quantities that are going to be down here as a little refresher. Everybody calculate the quantities on target loss of 100, break even, target profit of $1 million. So let me see how you all doing. You all have 7 minutes at the most to make these calculations. So based on these, I got stuff in red. I want you to calculate on this sheet target loss, quantity, break even quantity, target profit of $1 million. So take 7 minutes to make those calculations. Okay, so someone other than Mike, not Mike, one of these Ashleys, what's my break even quantity? What is my break even quantity? Okay, let's see. We said the raw materials, let me go to break even year, 50. One was 40, one was 49. How much was the labor? I gave you all the numbers.
The labor was one,
So we
and
add
then
all of that up. What's the product variable cost?
100.
And of course, I was nice. I gave you the selling price is what, 500, right? Then I
Yes.
told you the bad debt is 10% of that. So what's the bad debt going to be?
50.
And what's the selling expense going to be?
30.
Now I said
Selling
I made it 20%.
expense 20%. So we
Five
taking 20% of the 150, right?
of the 500.
Oh, we taking. Oh fuck! I did the wrong number then.
So the total variable cost when we add all of these up is what? That 350?
100 plus 50. 1, 2,
Is that
1, 2,
250?
2.
250.
Nah, it's
2.
250, Professor Boy. It's 250.
And so what's our contribution margin?
500 minus 250. No, no, hold on. Contribution margin is
250.
yeah.
Okay.
250.
Okay. Contribution margin 250. What are my fixed costs? Manufacturing overhead was what?
200,000
Administrative
and
expense?
40,000. Are we adding up all those 10,000? Right, it's 40,000.
I thought I put a number over there for administrative expense.
Not you
You got
didn't.
to add them
So
all up. You got to, because it's quarterly, you got to get it for the year.
right, so it's 40,000.
Administrative expense?
Yes,
50, 50,
depreciation
50, 50. That's 200,000.
initial balance is it not the depreciation
Talking about
included?
now you ignoring depreciation right now. The administrative expense in total is 200,000. I put the red numbers there for you. And what's the interest expense?
100,000.
Right. So our total fixed cost is what?
500,000.
So what's our break-even quantity?
Initial expenses 200,000. 500,000.
It'll take you a long time.
2,000.
2,000. 2,000.
2,000.
Right.
2,000.
These counts divided by unit contribution margin.
You might better put your formulas on the sheet as you redo these. So 2,000. If you and if we made $1 million, how much would it be? Did anybody get that for? Well, let's just start with the 2,000. we're gonna stop with the 2,000.
Dr. Boyd, I have a quick question.
Yes,
So with the contribution margin, do we use the product variable cost or the total variable cost? Or does
total
it depend?
variable cost. Total
Okay.
variable cost. Purpose of the product variable cost is for you to get a multiple to get the selling price. I gave it to you here, so it probably would have been 5. So the selling price multiple would have been 5. But you find it difficult, well, it just wouldn't work. So you got to do all of that. So it's good that we're working on it. So we see this now. Does everybody see that? So let's see what we're gonna do with the 2,000. Okay, let's see what we're gonna do with this $2,000. And we're gonna come right in here with our on the sales budget and put $2,000 down. Okay. So that's what we do. We make the calculation of the quantity, and so for the break even year, we got to do this for each year. So the break even year, the 2,000 quantity is here. For the target loss year, you got another quantity. For the $1 million year, another quantity. And for the $2 million, you got to do another one. And you have to run through these budgets each year. Now, if we go back to our assumptions, what percent were we selling the first quarter?
20%. Oh, hold on.
And your assumptions, is it 20 or 10%?
10%. Excuse me. 10%.
What are we selling the second quarter?
20%. 20%.
What are you
Say this.
selling the third quarter?
30. It goes up each quarter.
What are we selling the fourth quarter?
40%. Sales 20. Sales 2,000.
So in the first quarter, then, how many I'm gonna have here in the first quarter?
The sales total. Oh, fuck.
How many of this 2,000 gonna be in the first quarter?
10% of 2,000.
No, it's hard to calculate.
Is it 200?
200.
200, and I'll put this other one in here just to help out 400. Okay. So, and we would just spread these numbers all the way across, that sales amount all the way across. I guess we put them in. So in the third quarter, that's going to be what, 600, and the fourth quarter, 800. So all that's gone. So we had 2,000. Now we're breaking that 2,000 down by quarter. Our selling price was what?
500.
$500. What's our total sales going to be?
It's 10,000. It's 100,000.
Might be
It's
more than
500.
that. 500
5.
times
Oh, that's a million.
500 times 200. That's probably $1 million, right?
Yep. It's 100,000.
What?
500 times 200.
Yeah, because you said that's how much. I'm thinking about the last problem. How much is
That's
500? 500 times.
100,000.
All right, I'm gonna go to 100,000. I was thinking about the last problem. The credit sales, we said all the sales are credit. It wouldn't have to be that way, but if you don't, you're gonna have issue with the bad debts. So just to simplify it. So 10% of the people not gonna pay. So that's 10,000. We're not gonna collect. In this quarter, and just change all these months to quarters, we're gonna get 40% of our money, okay? So we getting 40,000. The rest of our money we're getting next quarter. So 50% is gonna be over here in quarter two. So once again, let's see what's happening. We sold 200, selling price 500, 100,000, all credit sales. 10% we're not collecting at all. In this quarter, we're getting 40,000, and then in the next quarter, we're getting 50,000. Any questions? So our total collections is 40,000. And what we're gonna do, we're gonna take this 40,000 and go down to our cash budget. And we're gonna put the collections of 40,000 here. What was our beginning cash balance in this problem? What was our assumption as to the beginning cash balance?
Was it $200,000?
I'm gonna assume that's correct. So our cash available is 240. And now we've got to go through all the disbursements and add them up to accomplish the same thing. Do we have enough cash or do we need to borrow? Okay. So we got our beginning cash in, cash available. So by the end of the day, hopefully we'll get quarter two done for the sales budget. Now, let's go to the production budget. The first number on the production budget is sales. So we look up here, the sales in the first quarter is 200. You got to produce how many you're selling. Okay, you got to produce. If you're going to sell them, you got to make them. But we want some of quarter two's amount already made. And what the assumptions say is that we want 50% of the next month's sales already produced. So in the first quarter, we not only have to do sales, that 200, but we look up here, it's 400 in the second quarter. I'm gonna put 400 here. So we got to make in the first quarter this 200 plus 50% of the second quarter's amount, 200. So the total needed is 400. Okay. So 2,000 is our number, correct? We've worked this out as 2,000. Okay. Okay. We don't have any beginning inventory here. And so the units to be produced is 400. We got to produce everything we selling plus half of these. Now watch this. For raw materials, ink, the 400 comes down. For raw materials, paper, the 400 comes down. And for labor, 400 comes down. So whatever is on that production budget then comes down to all the raw materials budgets and labor. Whatever is on the production budget comes from the sales budget. Whatever is on the sales budget comes from total sales, which comes off of this CVP workshop. So you can see, if you don't have that number correct, a lot of things will be impacted. Okay, let's go to the raw materials budget. And I think it said an assumption we needed 5, correct? We need 5 ink cartridges. So if we're making 400,000, how many ink cartridges will we need?
2,000.
2,000. So now hopefully you're seeing why you have to be focused on those numbers on the sheet so you can put that in. The unit cost is what? 10, right? So the total cost needed is going to be what? 20,000? So we brought down our 400. It's taking 5 units. So we need 2,000 of those ink cartridges. Unit cost 10, 20,000. Now here you're seeing the assumptions that we pay 75% when we buy it and 25% the next quarter. So this is the quarter purchase really. 75% the quarter purchase, 25% the quarter afterwards. So we're only paying 75% or 15,000. Okay. And then the quarter after purchase, we'll pay the other 5,000. Okay. So total payments in the first quarter is 15,000. So we're going to take the 15,000 and that becomes the first item down here. So because we have, got to do the same thing with a cash budget, we're going to go to these schedules and determine how much cash is involved as we work on the first quarter. Let's go to the paper. And the per unit requirement there was what? 7, correct? So how many will we need? 2,800? Is that right?
Yes, sir.
And the unit cost is 7. So what's our total cost going to be? Well, 7 times 2,800.
19,600.
How much?
19,600.
Okay, 19,600. We only paying how much of this? 75%. So how much are we paying in this quarter?
14,700.
18,700. The remainder will be paid next quarter and it'll be in this box here. So in the first quarter is 14,700. So we're going to take the 14,700 and we're putting that on the cash budget. So we're determining quarter by quarter. And this is what if you're making something, you got to do it this way, as opposed to when you're buying something. Next, we have the labor. And what were our assumptions on the labor? It's 400 units. And what's the per unit requirement on labor? How many can we make in an hour?
Boy,
I think we can make more than one in an hour. 20 books per hour. So how many hours you gonna have to work if you can make 20 books an hour? How many hours you gonna have to work? How many hours you gotta work?
Is it 8,000?
Is it 20?
20 is a better number. You divide. Well, I tell you, y'all gonna get that right one of these days. And what's our labor rate? How much were we paying per hour? Let me go ahead and find it. Labor rate. $20 an hour. So we paying $20 an hour. So direct labor that's gotta be paid is gonna be what? If you work 20 hours at $20 an hour, how much money would you want?
$400.
$100. So now we got the labor, $400. Now let's go to the manufacturing overhead. Quarterly, the manufacturing overhead was, it's a fixed cost, 25,000, but 10 of it was depreciation. So we're gonna take 25,000. We're gonna subtract the depreciation since that's not a cash item. We don't want to borrow money to cover depreciation because we don't have to pay it. So the total payment is 15,000. That will happen all the way across. So now we got the manufacturing overhead in 15,000. Selling expenses. Selling expense rate we said we're going to use is 20%. What's our total sales in the first quarter? We'll go to the sales budget. Total sales were what? 100,000. So the payment's going to be 20% of that, or what? 20,000. So we paying the salesman 20,000. See, we're building our budget. Next come the administrative expenses. The administrative expenses going to operate just like manufacturing overhead. It was 50,000. 10 of it was depreciation. So we put 50,000 here. 10,000 is depreciation. So our total payment is 40,000. That 40,000 is going to come in here as administrative expense. Now we go to the capital expenditure budget and we look at what happened, and we'll be doing this on the projects and everything. We could make a down payment, but we didn't. We bought them $1 million with a long-term note. So we don't have any cash expenditure for that. Only thing we have is interest and principal. Principal 100,000, interest 25,000. So principal is 100, interest is 25,000. We're gonna transfer both of those numbers. Interest is 50,000. So what's my total expenditures? I'm in Word. Somebody who's in Excel, add them up and tell me what the total payments are in the first quarter.
Dr. Boyd, how'd you get 50,000 for the interest? Is it 25?
Oh yeah, let me cut that out. I think undo. That should be how much? Did I put the wrong number in? 25,000. Okay. So it should be 25,000. Is that correct?
Correct.
But we add all of these up. We get 230,100. Is that right?
Yes, sir.
So you notice something I did was I just copied from the Word document, put it in an Excel, then once I highlighted it, it told me what the sum is. So sometimes you can do that. All right, so how we looking? The cash available was 240. How much do we have? So we got an excess available of how much?
$9,900.
Okay, I'll take your word. $9,900. So how much of a short-term loan we gonna need?
Do we have to have ending 100,000?
Gotta have 100,000.
So we're gonna need 109.
I don't think so. We already got
Oh,
9,900.
we got an excess of 9,000. Do we subtract the 909 the 9,900 from the 100,000?
Probably would.
Gotta have ending cash balance of 100,000.
So that 90,100 we borrow.
Okay, so we subtract. Okay.
Are there any questions? Okay.
A whole lot of work, Dr. Boyd.
Is it?
Shit. Shit. I mean, yes, sir. I think it's more the jumping. I think it's the like having a switch from screen. I see why you got us printed out because switch from screen to screen is what.
Yeah. So now you got it down. Now
Wait, so
this word, you
we
gotta
gotta
use
do
your
this
Excel formulas.
quarter. We gotta do this every quarter.
Yep.
Do we give it to? So we give each quarter to each teammate.
No, you give each year to each teammate.
All right, I got you. All right.
So this has to be done 4 quarters for each of those years.
So 1 quarter is 1 year.
How you add? How many quarters does it take to make $1?
So we gotta do all 4.
So yeah, you got to do all 4, and you get all 4 done and correct. As team leader, you'll be finished, and you pass it on to somebody else to do their year.
Dr. Boyd, is it possible for us to give the quantities for their years, or do you want each teammate to figure their quantities out for those?
Well, in actuality, that's what this sheet is for. They'll have their quantities. So what you put in here are the quantities they'll be using, and we're gonna go over the fixed cost next time.
Got it. Perfect.
So once they have their fixed
Um,
cost, they can start. Yes.
quick question. So does each year depend on the previous year?
Yes.
Really?
Well, that's why you gotta have the first year correct.
Got you. Okay.
Because the collections, some of those in the first year go to the next, and some of the payments do. Just a few things carry over, but most of the years go by themselves. But if that first year is correct, and if the team and the team leader get a few formulas in, then it's not that much work after the first year. But the first year, you got to get it set up, get your formulas in and everything, and get those collections straight. And you got to make sure that this CVP worksheet is correct. You got to make sure that the CVP worksheet. So what we're going to do is this, every team work on it. Every team be ready to present their schedule and their journal entries. Now remember, a lot of these schedules are very simple. Okay, so take administrative expenses, it's going to stay like that all the way across. There's nothing else to do. Capital expenditure, this is all you're doing. Same numbers. Selling expense, you're going to be applying that percentage. Not 10 minutes worth of work. Overhead stays the same. And even, these are not that bad. You only got 2 difficult schedules: sales and production budget. If your sales budget is correct, and if your production budget is correct, then these others do not take that long to do. And Mike, you can, every time a number is coming down here, you can transfer it to go to the cash budget. So I just did it simply, in Word. But if you go to Excel, you should be able to transfer these bottom schedule amounts directly to the cash budget. So you wouldn't be doing it that way. I just wanted to demonstrate it. Got it? So every bottom, the amount going to the cash budget is at the bottom of each schedule. Nothing on production, but here's raw materials. So what you can do is to, you know, write a formula so that every amount on the bottom or bottom two lines in this case come here automatically. Got it? So once the schedule is done, it can go in there automatically. So what we want to do is to get this cash budget, this problem done. It becomes the example. Your project needs to look like this. If you get this done, then you know how your project needs to look. So we're just doing the break even year. So next time, next class period, all 4 quarters need to be done and totals and journal entries. So especially if you look on the Excel sheet, it's going to, well, even here, it shows you where the journal entries are. See, it's CB cash budget. That's saying what's going in. JE, you need a journal entry. So it's already there. Once you add across, you got the amount for the journal entry. And the journal entries on the Excel sheet, just put those next to the schedule. So to the right of the schedule, I think if you look at the Excel sheet, you'll see space for the journal entries. So just put your journal entries by each budget also. And that'll make your work easier. Chris is good to talk to help you work with Excel. So in terms of getting a lot of things to tie in so you don't repeat the work. Like I said, the day I was demonstrating it, you just need to get your schedules in. Get your formulas in. So what we want to do is to get all next class period, have all schedules done, have all journal entries done. Then each team will put the journal entry together and schedules entry together for that team and come up with the balance sheet, income statement, cash budget for the first year. So that you will see when it's correct, we'll go over some things that shows that it's correct. So some of this we'll see next time when you make the journal entries. But a lot of those journal entries, all you're doing, especially for a lot of the budgets, you simply, especially after sales and raw materials budgets and labor, all you're doing is put the same thing in, get a total. Put the same thing in, get a total. So most of the schedules are simple. But if you were to start a business making something, this is what you have to do. If not, if you don't do this, then you won't really be able to finance the business as it should be. And we know that what's the biggest mistake businesses have? Their financial statements. Are there any questions, further questions?
So for tomorrow, you want our project that that variable cost, correct? Or that
Correct. I want to see, I want to see this on the project.
okay.
And hopefully you see why. I want to make sure it's correct. Because if it's not, then you'll have problems with your tie-ins. So put your formulas in case you make a mistake, so you aren't having to re-put that stuff in. So you should put in as many formulas as you can. So if a correction is made, it flows straight through. But that's up to you to do with your spreadsheet. So each team has to do that. So I want these so I can check. I want to check the top part. I just want to see the top part and make sure that we're going to be able to do the calculations. So you're just going to be at that unit contribution margin. Then we're going to talk about the fixed expenses, and we'll go over how we'll get those in. And we just sort of estimate those, but we'll go over what they should look like so we can finish up. But the errors come up here. Okay, the errors come in here. So that's what we have to make sure is correct.
Okay,
Any
so
further questions?
for tomorrow, we need to calculate our break-even figures for our project, and then enter in and find out for the 4 quarters for the first year, or for the first year, or for the 4 quarters for 4 years.
For tomorrow, I only want you going to the contribution margin. And I got to check that to make sure it's correct. You don't have any fixed costs yet. Then we'll work on the fixed costs once this is correct. Because if there's an error up here, when you get ready to apply those formulas, it's going to give you the wrong number. So I want to concentrate, and I want you to concentrate just on your contribution margin, your unit contribution margin. Got it? That's all we need to do.
Yes. Okay.
That's all we need to do. Any other questions? So, we're hitting it for the first time, and because we didn't begin on this last time, uh, we had to cover a little bit more, but we'll make up those 15 minutes today and on Thursday. If there are any issues or problems, then just email me if we need to meet at 5:30. So if you think we need to meet at 5:30 on Wednesday, let me know now. Email me. Unless you got all of this down?
Yeah,
Yeah.
Ashley just informed us that we're going to be meeting tonight. So if we have any questions, uh, could you, yeah, could you just like log in tomorrow at 5:30? Because I'm pretty sure we might have
Okay.
some questions.
That's what I need to know. I will be on tomorrow at 5:30.
Okay.
Please post the
So
video.
I will post the video. So I will get it posted in about an hour or so. So Mike, this is where Excel can make our work simpler. If you put the formulas in, a lot of you put your
Yep.
appropriate formulas in, then it won't be that much work. But if you don't use formulas, then it'll be a lot of work, especially for the people falling behind with the following years. So you'll help them at the
Got it.
formulas.
Yes, sir.
Okay.
Appreciate it, Dr. Boyd.
Okay. Any question by anyone else?
Yes, I have